and these are probably going into mostly IRAs, into the Delaware vault. There are some big stackers out there that are collecting 1,000-ounce bars. Hello there, my friends. Rafi here from the Endgame Investor, wishing Chris and everyone at Arcadia Economics a happy release from YouTube prison. I'm sure you said something very horrible that deserved all the censorship you got. We can only hope to emulate their example. They must have said something really bad about silver. But anyway, it's good to be back. In today's silver report, we're going to cover silver being at a historic pivot point going back all the way to 2008 right now. And when is the next intermediate bottom in precious metals? Well, we don't know exactly, but we do know that open interest in gold is at 2-year lows, and it's probably not going to go much lower than this, which means we're probably very near a bottom, as lows in open interest, the amount of futures contracts open and unsettled, tends to conform or tends to coincide with intermediate bottoms in gold. And silver follows, of course. COMEX silver is at 2018 levels, and there are fewer SLV ounces for the ETF in New York. They've moved to London, whereas a lot of the eligible gold is still heading into the Delaware depository that stores silver mostly for individual retirement accounts, IRAs. We'll go into that. And annual money supply growth rates are lower now than they were in 1929, when they were at just above zero, which led to the crash of 29. But anyway, on to this week's silver report. Today's silver report is brought to you by Fortuna Silver Mines, symbol FSM. Latest news is that the Seguela project is on track for commissioning in the second quarter. David Whittle, Chief Operating Officer, West Africa, commented, construction activities are nearing completion despite worldwide supply chain challenges. We are pleased to report commissioning remains on schedule for quarter 2, 2023, scheduled for the first gold pour in mid-2023, and this will start to affect the company's top and bottom lines very soon. And with any luck, by that time, with all the investments complete, the gold price will be much higher, and Fortuna will be able to benefit and leverage, as they say in business parlance. Disclosure, I own some shares of FSM. And of course, do your own due diligence. I said we were around a historic pivot point going back to 2008 in silver. Today, we had a coil, thought it might break up. It broke down instead, and we are back at that pivot point. It doesn't mean that if we break below it, silver is doomed. That's not going to happen, because silver, of course, is money, and money is in great need right now because everything is inflated. But anyway, you see here that this pivot point goes back all the way to the highs of 2008, just around 2150, let's call it that. And the breakthrough of this level back in 2010 led to the top at $50 in 2011. And this was resistance during the bear market in 2013, 2014, resistance again when the bull market restarted at the end of 2015, resistance here, and we broke through it again during the run up to August 2020 post the COVID insanity. And again, it was support back here in 2021, 2022. And then we broke through it, but now we broke back above it, and we're testing it once again. So we have 7 points here. You can count 8, 9, but it's a big number here. And yeah, we might break below it, but we might not. Here's why I think we won't. At least we won't significantly. This is the next slide. Gold. This is open interest, the amount of contracts open in the gold GC COMEX contract. And we are down to just about 2-year lows. The 2-year lows, I think, are about 423,000, 422,000, something like that. And this is yesterday's numbers, which is recorded on a day delay by Gold Charts or us. I think we were at 423,000 now. So we're just at 2-year lows in open interest. And lows in open interest tend to correspond to lows in the gold price, not every single time, but it is a good bet that we're not going to go much below 420,000 in open interest. And once the open interest heads back up, that means that interest in the gold futures contract, which the spot price is basically locked in at, is going to head back higher, which is why I don't think silver has enough time to break through the 2150 pivot point with any decisiveness. And I think we're going to bounce from here. Could I be wrong? Yeah, I could, but I'm not wrong about the end game. We know that's coming. And now, some interesting things at the COMEX silver pile. First of all, we have eligible supplies, meaning supplies that are not for sale, they are draining out, except at one vault. And we'll go into that in a second. The total COMEX stockpile is now at 288 million ounces, down from 400 around silver squeeze. So we're now at 112 million ounces drained out of the vaults since silver squeeze. But there's something more interesting about this chart. You see here, we're at the 2018 level, about October 2018, let's call it. What was going on back then in October 2018? Look at this. This is the SLV vaults, where the silver for SLV is supposedly stored. I was able to go back in the Wayback Machine, and they had a capture for November 22nd, 2018, just around that time, where you see here the red line is at the end of 2018. And how many silver ounces were in the COMEX vaults here for SLV at that time. So we have here the JPM New York vault, the bottom row here in the 2018 list. And we have here 126.5 million ounces about. And now, February 15th, 2023, you see here, the number is for the JP Morgan New York vault. The rest is London stuff. So it's not counted in the COMEX, obviously. The number is 103,176,000 ounces. So that's a difference of about 24 million ounces, something like that. And who picked up those ounces, we don't know exactly, but this is a coincidental number. We have the Delaware Vault, which I mentioned in the last silver report. It's still stacking more and more silver, and we'll get into yesterday's movement. The only vault to gain silver yesterday was actually the Delaware Vault, and it gained it from other vaults, which transferred actually its eligible silver not for sale on futures to the Delaware Vault, the individual retirement account specialty vault. So 25 million more ounces in the Delaware Vault corresponds to about 23 million less ounces in SLV. So silver is flowing on net, maybe not directly, from SLV to IRA accounts. This is a very good sign. You see here this final red line just at the end here. I can't really zoom in on these charts because the gold charts or else doesn't let me, but it's about, let's say, 36.5 million, and now we're at 40.5 million. So just from the last month, this is about a month, right? Just in the last month, we have gained about 37, 38, 39, about 3.5 million ounces of eligible ounces. These are not for sale, and these are probably going into mostly IRAs into the Delaware Vault. There are some big stackers out there that are collecting 1,000 ounce bars. This is today's, February 15th, actually, latest data for the silver movements in the vaults of the COMEX. A drainage of 1.677 million ounces, 1.678 million ounces in the eligible, and it was a drain. It was a drain of almost 2 million ounces. But if you scroll up here, well, look at this. This is the received. This is the received column. So silver that was received by vaults and silver that was withdrawn. So withdrawn from Brinks, withdrawn from CNT, withdrawn from JP Morgan, withdrawn from MTB, Manfred, Tordell, and Brooks. But who added? That was the Delaware Depository, about 300,000 ounces. So the IRA stacking continues. What about the JPM vault? The JP Morgan vault stores mostly silver for SLV, right? And some other stuff. It's 103 million ounces, and this is a total of 135. So most of it, 60-70% of it is SLV. And the eligible silver for JPM, for JP Morgan from that point in late 2018 is down about 13 million ounces. So silver is flowing out of SLV into IRAs and other things. Now, there's been some tracking on Twitter, and I've been pretty impressed with it, with the money supply. This is a Central Austrian School of Economics point, and this is page 92 of the book, America's Great Depression, by the great Austrian economist Murray Rothbard. And he was able to go through, I don't know how he did it, and he wrote this book in the 1970s, but he went through, like, I don't know, some Fed library or something. This is when you had to do real research with your hands and pick up books and maybe microfilms or whatever. And he was able to track the money supply from June 1921 to June 1929. That was the Roaring 20s. That was the boom. And why was it a boom? Because the money supply was expanding at unprecedented rates for the time. right? This is when they just started the experiment of inflation. The Fed was founded in 1913. This was their first real experiment trying to, drug the crap out of the U.S. economy, of the monetary system. So here, from June 1921, and in June in 1920, 1921, that year, there was a huge depression, post-World War I, deflationary time. And the deflation on that period was the most extreme ever, even more extreme than the Great Depression that we know of. That is more famous. So anyway, following that depression, we started with 4.1% growth rates. These are 6-month growth rates, actually. These are not annualized, but you can look at the numbers and do the annualizing yourself. But they're pretty good, close approximation. We went up 10% in the next 6 months, and then 5%, 6%, 11.6%. These numbers were humongous at the time. Nothing like this had ever happened, and it created the Roaring 20s, right? And then down here, June 30th, 1929, the rate from December 31st, 1928 was 0.7%. We went from 73 billion of a total money supply to about 73.26 billion. So basically zero. June 30th, the crash occurred about 4 months later. So there was a bit of a buffer zone. The question is, how long is that buffer zone going to be now? It's probably going to be longer because the case now of monetary inflation is so much more extreme, so we have some leftover money that needs to burn out. Now here is the M2 annualized growth rate since going back to 1960. This is the longest chart that the Fed has for the Federal Reserve, going back to 1960, and these monthly figures. And you see here, the line here really has never gone below zero. This is the zero line, this black horizontal line, and we're going below it now. So on an annualized basis, the money supply is shrinking. And this is absolutely going to lead to a crash at some point. Now, you could ask the question, why didn't it happen in the early 1990s and mid-1990s, even though it went to zero? Well, my answer to that is the internet, because that globalized trade made goods and services a lot cheaper, and the global economy was able to pick up off of that technology, even though we were in a deflationary time period. But you can see during other periods when money supply growth rates plummeted. You can see here in 1978 it happened and there was a recession. You can see here in 1975 it happened and there was a recession. And you can see it in other places too. It's going to lead to a recession, which is going to lead to the next pivot, which is going to cause an explosion in the precious metals. We all know this is going to happen. The only question is, when exactly is it going to happen? And do we have the wherewithal and the patience to withstand these little annoying moves in our favorite metals? Yeah, I do. I hope you do too, because I have a feeling when this breaks, it's going to break overnight. It's not going to give anyone a chance to scale in. So the thing is, you want to scale in during the down periods. The times when everyone's frustrated is when you want to add, not when everyone's excited. If you enjoyed this silver report, then consider signing up for a 2-week free trial of the Endgame Investor, or joining my Patreon at patreon.com/endgameinvestor, where you will get a once-weekly biblical commentary on monetary and economic policy topics. Or you can follow me on YouTube at Rafi Farber. I put memes in all my videos. I'll see you guys next week, assuming Chris and Yara can stay out of YouTube prison.